Hello guys, Happy New Year 2021. Hope you enjoyed your weekend and the holidays, and hope this year will be better than last year. Every time we are in the beginning of the year, we wish the same thing. We wish, but for this year 2021, it's not the same. Hello, Bobby Six Killer. Thank you very much for coming. So it is not the same as last year, and it's not the same as 2019. So as you can see, 2019 was a good year. 2018 was a troubled year. We have a lot of trouble. We have a big correction. People, they begin to think of 2008 and they say that 2018 could be so bad, but at the end of the year of 2018 things begin to be better. From 26 December 2018 we have the big trend, and then 2019 was good. Then 2020, the beginning was good, as you can see, which is January and beginning of February, and then we begin to hear in January and beginning of February about coronavirus, what's this virus, and history and so. And then we have the big correction of end of February to the end of March, and then we have a big trend, and then the month of December is stable. So we didn't see any change, and I told you guys, try to be prepared always for any sudden things. But in general, December was calm. Okay, and even the politics with coming of Joe Biden, the market doesn't change. Okay, it doesn't fall as Trump said. If he loses, the market will collapse. So I told you before that politicians don't decide for the market. The market is Wall Street. Okay, when they want to hit it, they hit it. If they want to push it, they push it, and that's it. So it has nothing to do with economics or with our economy or Corona or something. So from the end of March till now, it means there is a big trend up. It means uptrend. So everything is everybody is happy. The market is going good. But if you see the economy, you see that the economy was bad. Hello, Miles Kubiak. Thank you very much for coming. As you can see, the market is bad. The market was excellent. It means with a big trend. Now, the economy was too bad. If you go online and you search how many companies have gone bankrupt, you will find maybe hundreds or thousands of USA companies. But if you do another thing, if you see, for example, IPOs, you will find also that we have hundreds and thousands of companies that get listed into the exchanges, and the exchanges are becoming bigger and bigger and bigger and bigger. Okay, so everything has what we call a double side. Okay, hello Nasa, how are you? Now, the subject of today is trading basics 2021. Now, if you try to see the history of trading, before this idea of charts, now all the people use charts. You can't even those who are trading, they can't even trade without charts. But understand that the earlier traders, the 19th century, the beginning of the 20th century, until the discovery of charts and how to use them, people, they don't have what we call charts. So how do they trade? Wiseman said, hello Karim, good evening. I sent you a message on Facebook on January 1st, wishing you to have a new year, and one other thing on January. Oh, I'm sorry, Wiseman. I don't know if I have answered you or not, but I think I will. I have answered you if it is in Facebook Messenger. I think I have answered you, but I didn't recognize I sent someone. Maybe 1 or 2 or 3. I don't know. Okay, I will check. Thank you very much, Wiseman. Now, since we are in 2021, we try to see, as I told you, the trading. Has trading changed, yes or no? And the basics of trading, have they changed, yes or no? This is the most important thing we are dealing with today. I'm not going to be wished you a happy both things. Both things. Yes, thank you very much. What is these things? I don't know. Okay, thank you very much, Wiseman. I will check your message. So, the question is, have trading basics, have they changed? And in real, what are they? As I told you, in the 19th century, when the market here in USA began to work, and they begin to have Dow Jones and the other stuff and the index, and people began to trade, people, they use only numbers, and all the numbers, people, they get them through newspapers, okay, through newspapers, and people, they can't go to the exchange at that time. For example, New York Exchange, they can't go. So there are some shops, as have you heard, maybe. Thank you very much, Wiseman. Birthday and New Year. Thank you very much. Now, at that time, we have shops, and they send them information by phone or by telegram, or they use old stuff, which is the telephone was one of the oldest things. They give them the information, and those small shops where they give you the information, they have board, and they write the numbers of some stocks that are well-known stocks. Okay, so there is no Apple, there is no Facebook at the time, but there are other very, very old stocks. So at that time, those stocks were very, very famous, and people, they try to see the fluctuation of the day, and by, like, let's say 15 minutes or so. So you are always guessing. Okay, you are always guessing. Is the price will be up or will be down? So you buy accordingly. So you take your phone, and you pay a big commission, because at the time commissions was so big. So those small brokers, they are just shops, and it's not regulated. Before 1934, everything was not really regulated. So people, they do scams. People, we have insider trading. They have ties with the CEOs of the companies, and they ask them about information. They bribe them. So it was a lot of problems, because this means a lot of problems, a lot of money. And that's why if you read some old books about trading, you will find this stuff. Okay, and there are some people who lose it all in some trades. Okay, bad news comes and they have a lot of money there and they lose everything. And the last thing you can expect is a crash in the whole market. Okay, so trading was at that time based on numbers. He said, wise man said, that must have been a tough time for traders back then. Yes, the only people who make money are, in general, insider traders. It means if you get the information from the company. Okay, let's say you have a friend, and the friend has a friend, and the friend has a friend, and that friend knows a CEO company. Okay, and when there is earnings or there is something, a major news, okay, you know the news, when the CEO writes the news, they write it mostly in the newspaper. So before it's going into the newspaper, before 1 day or two, this information is sold to some people because they pay too much money. Okay, because it is a sure trading. Okay, so all the other people who don't know, for example, a company, there is earnings, and the company has bad news today, but when they want to speak about this, they speak it, let's say, tomorrow in the morning. Let's say in newspapers or in the radio or whatever means we have at that time. Mostly in newspapers. So in the morning when you get the newspaper, because that's why before they read a lot newspapers. Not like now. Before it was, they can't find any information except the information on the newspapers. They can speculate about prices, about investing, about trading, and about a lot of stuff according to what they hear. Okay. Now, one of the guys that had been doing money, huge money, without this insider trading, is one of these guys. He's called Jesse Livermore. I have talked about before. So this guy, he was an operator in a shop. He write numbers. He's like a boy, you know. He was like 15 years or 17 years. They give him a piece of chalk and there is a board, and they say, okay, that's that stock. What did it open at? For example, 9:30. It opens at $20.50. He put that number, and this guy, Miles Kubiak said, no regulation on insider trading. No. Now there is regulation. 1934, there is regulations. No. If someone is caught or a company or it's over. It's over. They took him to the justice and it's a lot of problems. Okay? But I understand we are human beings. You know, it can be something, but it's not something public. But people, they know if they got caught, you know, the court will not let them play like this. No, it's in the past. Even now, maybe we have, but it's so rare. And in the newspaper, if you read the newspaper or you read the news or something, sometimes one is caught because he gets information from, but this is rare. Now, let's continue. This Jesse Livermore, I told you, he was putting numbers on board about the prices. Each 15 minutes, he put the number. And then he began to, I'm not saying he studies. This guy has no education. It means this guy is just 17 years or 15 years. I think he is 17 years. And he is not someone who is well educated. He knows about stocks, companies, and the CEO. He has nothing to do with that. He's just working like this. They give him some cents a day, because at that time, in the end of 19th century, it means around 1896 or something like that. It means at that time he began to work, and this is what his job. So the information, they give him a piece of paper. Okay, this company, the ticker is that one. They put just a few companies, because at that time there is no a lot of companies. Maybe there is like 30 or something, like Dow Jones or something. The biggest companies that are known and that are people, the newspaper, they talk too much about them, how they succeed, how they fail, what's the other thing, and people they read. Before, people they read because there is no much information outside reading, because there is no internet at that time. You know, we are in the end of 19th century, okay, and the beginning of 20th century. There is no internet. Internet just comes in the 90s, okay. It means at the end of the century. Now, so this guy, Jesse Livermore, he was looking at the prices and how do they move. So he comes up with a strategy after looking at the price. Okay, let's say this the price is of the company is moving down, and then it stops in one price. So he has a copybook, or he has a book where he wrote these numbers. Do you understand that these numbers you find in his book? It is published. He published a book, How I Trade. I think it's called How I Trade, and there is a literary book. I think it's called The Reminiscences of Stock Operator or something like that. I have read the book. It was an excellent book, but it was literature. Okay, it doesn't give you how he trades, but the other book, How I Trade, with Jesse Livermore, he shows you how he trades. Okay, he was a guy who doesn't care about people. So they ask him to make a book. He make a book and all the information, but the people, it's very hard. You should grasp these trading techniques and the strategy in order to make money at that time. Wiseman said, I remember when they give people something on paper saying you own a stock. Yes. Now this paper exists until now. The certificate. No, it's not the fake certificate of companies. They go bankrupt. You can find them in the market. There are some people who are collecting these certificates. Let's say, but these companies were bankrupt, so the paper has no value. You will find them, for example, maybe if you go online, you search, you find them in the streets, you find them in the markets, you find them in some shops, and antique shops. You will find. I one time I found those certificates. But these companies, let's say 100 shares of this company. You go and you buy them for $5 or $10 or $20, but this has a value as something for the people who collect them, because there is a market for collecting. As you might know, I am into coins collecting, and I have an idea about coins, and so this is part of collections. Now, let's drink some coffee, because I was sleeping, so I will just wake up. Now, but the certificate, it exists. Now it exists. You can ask your broker. For example, you own 100 shares of Tesla, or Amazon, or Facebook, or any. You can buy a certificate. But when this certificate, when you buy it from the broker and they send it to you, generally you are an investor. You are not going to sell your shares. So this, you can give it to your son, you can give it to your wife, you can give it to your friends as a gift. So it is true money. It's like it's the same as money. It means it just proves that you have 100 shares of something, or 200, or 1,000, or 10,000. Okay? Some people, they own stocks from the 20s, 30s, 50s, 60s. Okay? And they have certificates. But some other people, they have them, and then the company go bankrupt. Now, when the company go bankrupt, these papers have no value because the company has been sold, and the big guys take their money first, which is called preferred stocks. Preferred stocks, it means if you have shares called preferred shares, which is shares what we call A, class A. So you will be entitled to have some money before the normal guys like us, like when you go to trade or you invest in some companies. That's why some people, when they put too much money, like 10 million, 20 million, they always like preferred shares. If the company bankrupt or something happened, they follow the company, and in general they were given money before they give you. Okay? Because you in the stock market, it's over. You own something when the company is there. When the company is bankrupt, it's over. Your money is gone. And there is no insurance. The only place where there is no insurance is stock market. Okay? There is no insurance. So if you lose your money, it will be lost forever. Now, so I told you this guy who is called Jesse Livermore. I think maybe you guys, you have bought his books, or you bought this literature book, Reminiscences of a Stock Operator or something. It is one of the best motivational books I have ever read. Okay? We have some new books, how I made $2 million, how I make this and this, how I become a future trader, how I don't know. But it is not the same as that guy. The book is written as a story of someone. He doesn't know nothing about trading. He is not educated. He is one of the guys from the public. It means he is not a broker, or he is not someone who has education, or who knows companies or CEOs and the other stuff. Okay, he is just a normal person, and he was a child. He was like 16 or 17, so he was not even an adult at that time. And then he wants to try. He noticed something in the market, and he wants to try. Okay? So there is a friend. I think they begin with at that time. They begin with $1.50, I think, and he told his friend, "Okay, if you have some money and I have some money, I can trade. I can buy and sell and make money. I know how." Now this guy, he was, I think, his friend or something. He tell him, "Okay, let's try." Now, I I think he doubled his money in few days. I think they make $3 or $3.50. But understand, we are speaking about end of 19th century, like 1896 or 90 or something like that. It's at that time. Now when we say $1, it's not the same as $1 now. And then he began working, and his mother tells him, okay, because almost all the people lose, they know it's like gambling. It's like when you go to casino. It's the same thing. They know these shops, and people, they heard that this guy has $1. The stock was 5 cents. Tomorrow it goes to $5. He make let's say $1,000. $1,000 is like $100,000 now or more. So the people, they get excited, and the newspaper, they write about these people. Oh, that guy has made millions. Oh, that guy has made. So the people, there is what we call a vibe. It means people get excited because of this news and these people who are making money. And who makes the money? It's those shops. It means you bet on a stock and then you lose. Okay? So most of the time, those shops take almost all the money of the traders. It's like a casino. It means it's not really an exchange at that time. It's not a broker at that time where things are transparent, and you see the numbers, but the numbers are coming after 50 minutes or after half an hour. So, and everything by phone. It was so you bet, you put the money in that shop. You say, okay, I put money on that stock at $20. Okay, you pay $20. You pay how many shares you want to buy. You put that money there. They give you a paper. Now you just fold your hands. You put your coffee or tea or whatever, and you will waiting for 50 minutes or half an hour. What will be the price? Okay, let's say 20. They say, oh, it's $17. Oh, you have lost $3. What you should do? You lost. They give you the number. The number is the number. It means there is no way things will change. It will change after 15 or half an hour. So you get scared. You sell. And after that, 15 minutes or half an hour, they say, no, the price is 25. So you begin crying and you say, why I sell? If I have sold, I have made money. And yeah, but it is just a game, and most of the people, they lost their money. Yes, Miles Kubiak said, reminiscences of a stock operator. Yes, this is the title. Herman Mann say, hello Karim, thank you very much Herman for coming. Nasa bucket shop. Forex brokers are today's bucket shops. Yes, you know, everything is a bucket shop from the past to now, except when you know what you are doing and have experience in trading. Now, just Livermore begin to understand that there is a pattern. It means when the price moves, it follows some rules. Okay? If it begins to go up, it means it continues to go up. If it's going down, it might continue going down. So he began to make a strategy. And then his mother told him, these bucket shops, or this what we call trading, and these bucket shops are just gambling. And what you make in a week, or a two, or a month, you are going to gamble. And the people, they know because of what the people hear, that this is like a casino. You go there and it's just gambling. You know, they know bars at that time. Bars where the people, they go there playing cards or they gamble, and most of the people, they lose their money against the house or against other people, especially those who don't know how to play, and they lose. Some people, they lose a lot of money. All what they make in a year, he bring it in one night and he lost it. Some they lose their wealth. Some they were rich, they become poor because of this thing, because it's just gambling, like they say. Now, NASA said bucket shop, forex brokers are today's bucket shop. Not just futures, we have forex, we have options. Now, the most money brokers are making are from options, because the people, they don't know how these options move, and the bid and the ask is too big. People, they don't realize that if the bid and the ask, for example, an option, I'm just because we are speaking always about trading, so try to check it. Check it. When the volume is less, you will see that the bid and the ask is very wide. For example, I just give you an example. An example. If the ask is $1.50, $1.50 is the ask, and the bid is $1. So do you know what does it mean when we say $1.50 and the bid is $1? It means if you are buying from the broker, you pay $1.50. It means $150 for the contract. Now if you decide to sell, how much you sell it? You sell it for $100. How much you lose? You lost 33% of your money just because of this bid and ask. A lot of people who don't understand that in order to make your money, because when you sell at $1, in order to make your money, this option should go to $2, $3, and other time you begin to see some money. But before that, you don't see. Even if it goes 50 cents, it becomes $2. And you are selling at $1.50. What does it mean? It means you get your money back. That's it. So this is how options are very, very lucrative for brokers. Brokers, they make a lot of money with with the market makers. They have your money and they get it. Okay? So understand that this is not easy job for traders, for especially options. Lucky Luke, hello Karim, thank you very much Karim. Top series, hello Karim, hope you have a good holiday. Thank you very much, man, thank you. Mr. Dobson, most do limit order, never market. No, you don't understand. You don't understand. I'm not speaking about limit order or market order. Okay? I'm speaking about the bid and the ask. I just give you an example. So if you don't understand, put it in paper. Put this information I tell you in a paper. Okay? So if I can, I just if you are aware, I can just make this clear for the guys who don't know. Okay, so guys, just look here. I'm just trying to make you an example. So this is the ask, and this is the bid. Now the ask, who asks you? Who asks you? Is the market maker. The market maker has the ability to sell you. Okay? So the market maker asks you, for example, $1 150 is the contract, and you pay $150 for the contract. Now who buys from you when you sell? Here you buy, it means, let's say I buy. Okay, I buy from the market maker. This is $1.50. Now who buys from you is the bid. It's the market maker. It's the same guy. Okay, so $1. It means you sell it to him for $100. Okay, so in theory, how much you lose? You lose $50. Just on time now if you want to sell. So you buy at 150, and you sell at 100. This is called here, between this and this, is called the spread. The spread is found everywhere. It is found in stocks, in options, in futures, but in options it is the most. Options and I think forex and options, those that they have the large spread, or sometimes depending on the volume that you have. Okay, so even in the future it is $2 the price. So you are going to sell it to him at 150. So 150, for example, you stay one day or something. So from $1.50, this is the price of now, you bought with it, it goes to $2. You are making nothing, because $1.50 or 150, this is what you get when you sell to the broker, to the market maker. So here you have no gain at all. So this is how dangerous is the options. Okay, so this is just an idea. So Mr. Dobson, this has nothing to do with limit order or market order. It has nothing to do with that. It has just to do with the bid and the ask. Nothing. Now you say only do leap year, and yes, leap year. Okay, I'm telling you something. You bought the time for the year, which what we call you buy the time for 1 year, and let's say you buy out of the money. It means the strike is, for example, for the call, is far away from the stock price. Now, this, if you are right. What if you are not right? All your money for this year that you put, the value, extensive value, just for the time, all this money is gone. So it all ends up with what we call it means you lose all your money. There are billions and billions are lost each year from these options, which are worthless. It means if you buy a call, you are going. You think that the stock market or the stock is going up, but the stock is going down. So you lose all your money, whatever you are. Either you buy out of the option, or in the money, or out of the money, or at the money, whatever you put. For example, if you are in 2008, when we have the crash, the stock market has gone 50%. If you bought a put, understand that you will be making a lot of money. In almost all the stocks, have gone around 50%. Some they go 70, 80, 90. Some so you will be making a lot of money if you are right. And this is one of the basics of trading and investing. Are you right? Yes or no? Okay? So this is one of the basics of trading. Are you right or are you wrong about the direction? Either you are doing scalping. Scalping, it means you stay only some 1 minute or 2 or 3 because of the there is a news or there is something. You understand that at the beginning, because of the news, the stock moves so fast. So you don't need to stay half an hour or 1 hour in regular days when there is no news, the market is calm, there is nothing. So here you are not going to make a lot of money from day trading. But understand that in days where it is very, very troubled, there is bad news and everything is going down. When you sell short or you buy put options, you can make a lot of money in one day. So all depends on are you right or are you wrong. Whatever techniques you do, even if you are the stupidest person on earth, and where some universities use this IQ. One time, one guy comes here, or I think he make a comment on my channel, and he say, I have an IQ of something. I have an IQ. I say, we are not in the university. The IQ is done in general to see the intelligence according to some programs like math, biology, language, and the other stuff. So it's not for regular people. Even if you have the highest IQ, you are a genius. You are in the desert, you don't find water, and the water maybe is 1 mile. Some stupid person who have no IQ at all. He is the lowest IQ on earth, but he knows where the water is. He can take this guy and show him the water, because without him he will die. So does this IQ help you? No. You are the most genius person on earth, but this information doesn't help you. So in trading also, most of the big mathematicians, when they go to the stock market, they lose money because the market is not based on intelligence. It's based on the fool people who are moving the market. Okay, you see the market. The earning news are good. In logic, the stock will have a gap up, and everybody will be happy. And the news is good, but you see that we have a gap down. So you don't understand. You say, why is that? Because the market is illogical. You don't follow whatever you see as a news or information. What you follow is the price. In order to make money in trading, you should follow price, because we are not in long term to be an investor. When you are an investor, you look for the company for sure, because you will see if this company can prosper or can become great or can become bigger or become international or to make more money, more products. This is investing for the long run. But now we are speaking about daily. Daily is just the market opens, if there is news, if there is something. Sometimes there is no news, the stock is going down. You ask yourself, why the stock is going down? There is no news. There is no information in the market. You go in the morning, you don't find nothing. The company has nothing to do with it. There is nothing. No news from the company. But some people want to give you a reason. That's why they entertain people, because the people Lucky Luke say, "Dear Karim, I have sent you an email for some days ago, but you have not answered it. I want to be your student." Okay, Lucky Luke, I think I have answered you, but listen to me. Here is my email. Okay? Now send me an email now. Just go and send me an email. Let me see here. Yes, send me an email. I have a Facebook. I don't have a WhatsApp. Guys, I am not into a lot of apps. Anyone who wants to reach me very quick, you can use my Facebook. So I will, guys, I will try to give you my Facebook right now for you guys who wants to reach me. Okay. Just send me a message. Even now, here is my Facebook. I don't use WhatsApp. I'm sorry. You can use Facebook. What we call a Facebook Messenger. Just you go to my profile. This is my profile. Go to a message and send me a message, and I will let you know if you are right or no. Okay. Miles Kubiak said, "How about buying warrants?" Now, warrants is like bonds, is like you are buying debts for interest rate. Okay, I'm telling you something. Okay? Let's say this warrant or this bond, it's all the same. Treasury bills, all this is called bonds. Okay? Now, they work with interest rate. Let's take an example of Tesla. Just an example. Tesla and this warrant. If this warrant gives you, for example, 5%, 7% a year, do you know if you bought Tesla, it was 250 this year, and it goes to 2,200, how much money you make? Four times. Yes. 900% of your money. If you put $10,000, you get $90,000 this year. Are you going to leave 900% and I go to do warrants and bonds and treasury bills? Are you a billionaire to give money to the government? Are you a billionaire or millionaire? Even have you ever seen, for example, Warren Buffett? He goes to the government and he gives them their money in order to get some cents, 7% or 8% or 5%, and he leaves the stock market can give him 50% or 70% or 40%. So guys, Mike Kubek, stop thinking about bonds. If you are an old guy, if you are 60, 65, 70 years, and you want to do some bonds because they told you you can make little money, but your little money is going by inflation. In 1 year, you lose 3% of your money. If they give you 5%, so you take 3% of inflation, so you are making only 2%. Who gives his money for 2%? Yes, but understand, Miles Kubek, to tell you the truth, I am not into anything that it is interest rate. I am not. Why? Because it didn't give you the money that the market gives you. Okay? So it's not the same. And for me, in my channel, I don't speak a lot about bonds and warrants and treasury bills and the other stuff because I don't believe in them. So as a vehicle of making money. No one is making money of this stuff except for the old people who have millions of dollars, those rich, and they told them that you are making 2% or 1% or 6% and you are safe. And there is no safe thing. There is no safe thing in the market. When it is very, very safe, they don't give you any money. Okay? And they use your money and they throw it in the stock market where they can get 50%. And then they give you, for example, in treasury bills and the other stuff. The government makes big projects. Companies or municipal or corporations, they do this stuff. They say, okay, give me your $100,000. I give you 5% in a year. So you are waiting the whole year in order to get this 5%, and then the inflation is 3%. So you are not making money. It's just this is a game of interest rate. So if you enter to the game, because you are not a bank, you say, oh, banks, they do percentage, 5%, 2%, they make money. But the banks, they get their money for free, nearly for free. For example, they get it for 1%. They sell it to you for 5% or 7 or 6. So they are making money without doing anything. So you understand? So stop thinking about this. But if you are interested, you should just look how do they work. All this, how much you make, and does the price is fluctuating. Because understand that the bond, for example, treasury bill or something, it is something that it is moving up and down. It means if the bond is $20, they give you, let's say it is $100, just to make it clear. If the bond is $100, they give you 5% in a year. How much money you make? You make $5, okay? Let's say it's true, $5. But when the bond is going down to $90, you have already lost 10% of your money. Now they give you 5%, but you lost 10%. They give you 5%. What does it mean? What does it mean? It means that you lost 5% of your money. You think that you are going to make money, but instead, most of the people, they lose money. So you are asking me why the people do this. No, these things, people, they don't know. It's like a game. It's like a casino. It's like a gambling. You say to me, well, why the people are gambling and they know they will lose their money? Yes, but they have this idea that what if I won? And this is the problem. This is the problem. Someone who is making money, he makes a company to make money. He can have his money and he go gamble. Okay? Let's say Mark Zuckerberg, who made him with his friends, they make Facebook. Okay? Why they take their money and they go to casino and maybe they make money? Why they don't do that? Why they make a Facebook and they make it a company and now it is one of the biggest companies in the world? So why they do that? Because they know that if they go gamble, they lose their money. That's it. Now, for example, Warren Buffett, let's say he has $100 billion. Why he doesn't spend 1,000 or 1 million each year doing gambling? He will never do that. Because he's not stupid. He studies economics. He knows how these casinos are working. They take all your money. He knows. So, and he try to see his videos, Warren Buffett. Do you think he will buy bonds? He is stupid if he buy bonds. He has never buy bonds. Because bonds, it means you lend your money to the government or to a corporation. You are poor. Even if you have $1 million or $2 million, you are poor. How can you give your money to a corporation that has 50 billion or 100 billion, and then they can make a lot of money? Because when they get profits, it's not a percentage. They get profits, they take their money as executives, they take money as they wish. So let's okay. Let's see, just a minute. Okay, I got your Lucky Luke, I got your email. I will answer you after you finish. You can click on my Facebook profile and you send me a Facebook message on this profile that I send you. It's okay. When I finish, I will write you back, because now I am in live. So okay. Gurkirat Singh said you are telling the truth. Thank you very much. Okay, so Lucky Luke, don't wait for me now. I'm working. I am on the live. I will send you an email afterwards, and you can send me a Facebook message. I have the cell phone here. Whenever you send me a message, I will get it. And Miles, I got your Facebook message. I will reply to you later when I finish. Okay. So Facebook Messenger is very, very quick, and you don't have to be my friend or something, or to ask for friendship. No, it's just you send me a message. I know who you are. That's it. Okay. It's very quick, and it's you can reach me very quick. The email is good also, because I check it 1 time or 2 times or 3 times a day. It's very good. Okay. Now let's continue with trading basics. I told you before, when this guy Jesse Livermore, he is the one of the few people who become a millionaire. I think he suicide. It was a tragic thing. I don't know why he suicide, but I think when he suicide, he has $100 million. I think in the 50s. I think he died in the 56 or 1956. Man, he has 100 million. When he began $1.50, and he was a child. Okay. He was a child, and he is not educated. See how you can become a good trader without education. The only education you have, it should be about the trading. You just focus on the price. Focus why the price moves up and down. Okay? You can try some other people help you with their strategies. Now, when you grasp the strategies, you understand how things, you can make your own strategy. And this is the good thing about trading. Trading is always progressing. It means you can make whatever. You have only one problem. How the price moves. How you can understand this process. If you understand this process, you can make money later with a good strategy and with a practice. It's like trading is like any other business. Okay? It's like boxing. You are not going to practice one night in the gym, and then the next day you go to face Muhammad Ali, or to face Mike Tyson, or Mayweather, or whatever is now the guy. You are not going to whatever is your strength, whatever you know, whatever, because that guy has long experience. He practiced daily, 5, 6, 7 hours. He is professional. That's why he can win. But you have no chance to win if you don't have skills. Now, skills, you should work on them. It's like I like the idea. For example, I like the idea. For example, with those guys who are doing bodybuilding. Bodybuilding, you see people, they transform their body. Okay, with what? Are they taking pills as the other people? Taking pills, taking this, eat that food? No, it's not. They should work out. And for a few years, you will have the body that you want. So you work on something very serious. Okay? And then, with experience, you develop your muscles. Okay? And you, in trading, it's the same thing. You develop your skills. Whatever you take from here and from here and from there, take techniques here, but it should be well, and you should understand what you are doing. When you buy, you understand why you buy. Why you buy at that price? What makes you buy? You should understand the reason. I'm not here speaking about the reasons. It's because earning news or because Trump has said the market will fall down, as the people say. Oh, okay. Trump said, for example, he is still our president until the 19th. The 20th, Joe Biden will be our president. So he said that the market will collapse if I lose. Now he lost. The market didn't collapse. Maybe it collapsed next year or the other year. I don't know. But the market doesn't follow presidents or politics or coronavirus. It doesn't. Coronavirus, America is the first country hit by the number of cases and by the number of deaths. But why our market is doing good? From end of March. Why we have a big trend? It's a big uptrend. Why? Why Tesla from 250 goes to $2,200? Why? You ask yourself why? If you have answers, you become a good trader. Just you have the answer for that. That thinks you should develop your skills. And this is what we call trading basics. You just know the basics and you can make money. You don't need to be highly sophisticated person with millions of dollars. But you try to be humble and try, if you don't have money, you have just little money, understand that your growth will be slower than someone who has, let's say someone who has, this is the example I always give, okay? Let's say someone who has $10,000, one has $1,000, one has $100,000, and let's say one who has $1 million. Just an example. These 4 guys. Let's say 4 guys. This year they make 50%. Now understand that someone who has $1,000, how much he make? He made $500. This is 50% of his money. He made $500. Now another guy with 10,000. How much he make? Okay. He make $1,000. He make $100. Oh no. 50%. It's 50%. It's $500. The guy who has $10,000. How much he make? He make $5,000. Okay? $5,000 a year, it's not a big deal. Now, why it's not a big deal? It's just because you have little money. It's not because you are not a good trader. You are a good trader. You have made 50%. You are making money. You don't lose. And 50% is good money. But because your money is little, you are not happy. Now, someone who has 100,000 and he make 50%. He make 50,000. Now, 50,000, you begin to see that it is some kind of money. It's very good. Now, let's say you have $1 million. You have made $500,000 from the market. So $500,000, it's a big money for most of the people. So you see that? It's not because that $1 million guy, he is doing better than $1,000 guy. They are the same. They have made the same percentage. But he has an advantage, he has money. This is life. Someone who has more money than you, there are some doors that opens to him. It is closed for you. For example, if you have money, you begin to see opportunities in real estate to buy this land, to sell it, to buy a house that it is cheap, very quick, buy auctions, to do this, to do that, to do that. So you have money, you have opportunities. But if you have $500 in your pocket, are you going to go and buy even a house with $50,000 or $30,000? Okay, you buy it, it's old, you fix it a little bit, and you sell it for $70,000 or $80,000, and you make some money. Now, if you don't have money, most of the time, you are at a disadvantage. So that's why I always tell you guys, the most important thing is trade with whatever your money, but try to make your account bigger, not just from trading, but try to save more money for your job. If you are an investor, it's the same thing. Try to invest the whole life. Investing, for example, it is not just to buy $10,000 and you find in some books that, that guy buys Apple, he has $10,000, he bought Apple as $1, now he is a millionaire. No, don't do like this is stupid ideas. This is a stupid idea. Not every stock is Apple. Not every stock is Amazon. Not every stock is Berkshire Hathaway. Where it was only $5,000, now it is $300,000 or $350,000 a share. You are not Warren Buffett stock. Okay? So understand the basics that you have some limits. If you don't have money, you don't buy bigger stocks. Okay? You see something moving good, but you don't have money. So it will be always a problem for you. Now, most of the people when they come to trading, they come with the same idea, with gambling mindset. That I have little, I will make a lot of money. This idea doesn't work. And this idea is shown by other traders online. I have seen someone, I see him, he's well known, and you see that. Okay, bring 1,000, I will make you $1 million. I have seen one guy, he's put it as a title, just to attract people or something. From $100, you will make $100,000 in 1 month. Well, what is this? Is this gambling and you have a jackpot? This is a stupid thing. Okay? It's a stupid thing. So, it doesn't work. So, when you push yourself, you want to make money, you push yourself, you fail. You fail because you don't understand how the market moves. You don't understand that you have little money. This will stop you from making big bucks. To make big bucks, you should make your account bigger by saving, by trading, but mostly by saving more and more people. You have 20,000. you have saved 10,000 or 5,000 from your job, you put it in your account, and you make 5,000, 10,000, and next year it becomes 50,000. Then the other year, you put 20,000 from your job, you put it in your account, will be 70, and you make 30, you make 100. And like these, your account become bigger and bigger and bigger and bigger, and you will have more opportunities to buy better stocks, to buy a lot of stocks, and not to be buying penny stocks. Yes, sometimes penny stocks, sometimes you are lucky. It's like gambling. The stock, someone has done it, for one from my students. I think he put all his money into one stock. It was, I don't know, it was the price, but he put 11,000. And after a few days, we have 2 or 3 gap ups at the same time. He make $55,000 from 11,000. But this will not work each time. Sometimes you put 11,000 in another penny stock, and tomorrow you find $2,000 because it has a gap down and they short it. So don't rely on spectacular things or on the gambling mindset. Don't rely on that. You will lose. And all the people who have done this, they lost their money and they don't trade anymore. And then they begin to say, stock market is a scam, exchanges are a scam, Wall Street is a scam, stocks are, everything in the stock market is a scam. It's just because you lost money. But people who make money, they say, it's true. I made money because the market is true. So it depends on where you are. Okay? So, Nasa said Jesse was good with numbers and arithmetics. Yes, he was good at numbers and at predicting or speculating about the price. He has a strategy and he succeed. Miles Cupid said you have to be selective on trades with less money. That's the one drawback. Yes, you have no money, so that's it. Wiseman, the more money you have, the more opportunities for buying house or condo that you really like. Same with trading, more money for opportunities. Yes. And those who do real estate, they buy on the margin. For example, they buy. But these guys, when they buy on the margin, because he shouldn't pay. Let's say he is an investor. He has, let's say, $20,000. Okay, and he wants to buy a house that it is 60,000. Just some old house. He wants to fix it and he wants to flip it. But these guys, they know how. They have been into the business for 10 years, 20 years, and they know how to buy, where to buy, what kind of house. He has a great idea how to make money from this. He knows the area. He knows if he wants to rent it. They know. Now, the stupid people, they come into the stock market, the YouTube or something, and they find someone, like Robert Kiyosaki or something, just buy and you make money. I will show you the way. And like 2008, when the real estate collapsed, almost all the people who have homes, most of them, they lost their houses. Owners and investors, the people they say between brackets, those gurus, they lose all what they have, and maybe they are in debt. So so things are not as easy as it might see, as you might see it. But sometimes it will be very hard. Most of the real estate agents, they stop working because there is no job, and they go and they find other jobs because there is a collapse even of banks. Banks, they go bankrupt because they don't get any money from the people, because the people, they lost their homes. And what they want to sell, this is the opportunity for the rich to come. A house that it is $500,000, you find it in the market with 200 because of 2008, 2009, 2010. The market collapse. Who will take advantage of this market? Who is the wealthy people? That's why the wealthy people, when something bad happened to the economy, those are the first to take advantage of all these events. Okay? But the people who don't have money, those you will find them in the streets because it's the way economy works. Wiseman said the more money you have, the more opportunities for buying house or condo that you really like. Same with trading, more money for opportunities. Yes. Mike Kubak, and many new buys are attracted to penny stocks and thinking it's the next Amazon or Tesla. There is a reason they are penny stocks, usually no good companies. Now, penny stocks, it's another story. It's another story because what makes these people... I'm telling you something. There are some people who have newsletters. Maybe you have heard about them. Maybe you have seen them on YouTube or our Facebook. They send you reports about a company that it is the next Amazon. The next, they find a big land of full of gold. It's a mining company. Gold is the most important metal in the world. So just invest in this company, and they give you this information. So they send it to people. I'm not saying to stupid people, but people who don't know what's going on. Are you going to be a shareholder in the company inside they give you profits from the company? Or are you in the stock market? In the stock market, you own what you see in the stock, but you don't own the profits of the company. So this is the difference. Okay? This is the difference. You are not a real shareholders in the company. You are outside. You the price that you see, you don't take that profits that the company make. For example, Apple, let's say they make $100 billion. Are you going to get profits when you own shares? No. They give you dividend, but dividend is not the profits I'm speaking about. The profits are the money of the company they make, and the executives, the employees, they can give them a lot of money, even without having a share. You don't own share at Apple, but they give you money. But this idea of dividend, that's why people, what they don't understand things. When I put videos about dividend, they say this is not the dividend that we think. Dividend is this is the definition of dividend. It's a cash payment from the company to you. I say, what's this definition? This is the definition for the stupid. This is definition for the stupid, for the people who don't know what is a dividend. A dividend, it's taken from the price in stock market. Taken from the price. For example, they take 5%. The stock is 100. They give you $5 from this 100. And next day, the price is 95. So it is your own money. They don't give you anything. They don't give you anything. It's just your own money. They just take a piece of cake and they give it to you to eat. But when you see your cake, you find one part of the cake is gone. And you eat it. And they say to you, no, this is profit. No, this is not profit. This is my cake. This is my money. Where is the profit? The profit should be outside my money. When you invest in a company. Let's say you with your friend. You own a restaurant. Okay? You put 20,000, he put 20,000, you open a restaurant and you work. Let's say you make $20,000 a month. So you take $10,000 as profit, your friend take 10,000 as a profit. This is a profit. This is the profit. Okay? This is not part of the company that they took, and after a few years there is no company. So you should understand this. Wiseman said, Miles, Cuba, Kareem has training for how to avoid scam for when buying penny stocks. Yes, you are right. Penny stocks, very risky. Yup, I have the training levels. Thank you very much. Bobby's sicker, and you have to pay taxes on dividends. You pay tax on your own money. Yes, but understand, guys, that dividend is good if you have a big account. You only pay, I think, 16%, so it's not like a regular income. So that's good. That's why Warren Buffett, he is the one who pays less tax than even his associates, his employees. Okay, so they pay tax like 28 or 30% or 33%. For example, his employees, they are 3 figures or something. So he himself, he pays 16% on this dividend. What does it mean? Because he has no job. It means he has no job. He is not making, because he's not stupid to do a job. Because when you do a job, it's a regular income. You should understand tax. But you know, guys, there is no education in USA. Although USA is one of the biggest countries in the world, but they don't teach people finance. They don't teach them. They don't teach them nothing about finance, about personal. They teach them all. Pay your bills, pay this, respect the law, do this. Yeah, okay. You are always paying. So, in terms of education, the guy who I like very much, like Robert Kiyosaki, he just try to educate people that you should make a company and you should not work for someone. Okay? But I understand that Robert Kiyosaki, what he did in his life, he will never talk to you about what he did. So something that he did, he will never talk. Even in his training, he will never talk about. Okay? So that he has done. I have made, I think, video or two about him and how he made his money. So it's a bit different. Now, I say trading basics are the same. They have not changed. Now what is changing is the arrival of charts. Now when the charts comes and they borrow this Japanese candlesticks from Japan. Japan, they use candlesticks, I don't know, for selling rice or I don't know, in their markets. So Americans, they took this idea of candlesticks and they put it as a day or as a 2 minutes or 5 minutes or 10 minutes. And then with the coming with the computers, things change. The commissions becomes cheaper and cheaper and cheaper, because before to buy you should spend $200 or $300 just to buy. So people, they should have money to do stocks and to do the stuff. So poor people, when they go to the market, they get ripped off. The brokers, they rip them off of their money without even trading. And then it comes what we call the indicators. People, they put strategy, they put it in a line like a moving average or something like that, or whatever. There are more than 300 indicators, okay? And you find them in the brokers, and because they are not useful, you will find more than 300, and they are having more and more indicators. So one time I was watching on YouTube, I watched someone who is trading, and the chart is full of lines of clouds, overbought, oversold clouds, different lines, green, yellow, even the price I can't see. I write to him, okay, man, take all this stuff, show me the price, what you are doing. Because of this line, it goes like up, this is goes down. This is the clouds. The clouds, it will be raining. Here it will snow. Here the stock is going up. Here it is going down. It's like he is making a movie. Okay, it's like you are watching a Jackie Chan movie, or like Chinese movie or Indian movie, or you are watching a sci-fi movie in USA. It means all are mixed up. So you don't. He doesn't even know what he is doing. You say, what you are doing, man? What's this? You buy from this line. You buy from this line. You do this. You do this. Because they put too much information from other strategies. Any indicator, it is a strategy. So if you want to have these indicators, you should study them. If you like, for example, a moving average, this should be for the long term. It shouldn't be for day trading or something, okay? Because a moving average is about the close of the day. You have 10 days closing, or you find 50 or 20 or 200, 300. You find the lane change. This is just strategy. But this doesn't mean that you buy above the line or under the line that you make money. The market doesn't follow lines. The market is people who are trading. Today, people are selling short. There is no news, so you should sell short. There is no other way. If you go long, you get crushed. It is as simple as that. You should just understand these things in trading. Okay? Trading is very, very simple. Follow the price where it goes. If it's going up, continue going up. If it goes down, you go down. For the time that you choose, either it's a daily daytime, like 2 minutes or 5 minutes candlestick, like the frame time, or it is a swing trading like us. We use the daily candlestick, and we for days, weeks, or months. Or you want to be an investor, you should see the long run, and you should see the company, the fundamentals. That's from trading to investing. Okay, so everything is based on the price. If you follow the price, you will never miss a thing. Money is related to the price. So there are other ideas that I spoke about before. Someone has lost money, and he sent me an email. He said, okay, I bought it at 100. Now it is $25. What do you think? I say you have lost 75% of your money. What do you want to check the company? Maybe it's collapsing. Maybe it's going to bankrupt. He told me, if I don't sell, I don't lose. This is what someone has told him. I told him, it means you bought 100, now it is 25. You don't lose. He said, I don't lose. I say, okay, buy. Because this guy is hypnotized. He doesn't know how the stock market moves. He lost 75%, and he's still stubborn to think that he can make money in the future. And then from 25 it goes to 10, it goes to $2, to $1, and then with the pressure, and he lost all his money, all his wealth. Maybe he invests in one company. He thought that it is the best. And there are other things. The CEO of these companies and some analysts, because they are paid what to tell, they make promises. Just hold 1 year. The company next year, it has deals with this company, and it is making new product. Understand that from $10, next year it will be $50. So the people, they hold for the stock, thinking that these guys, they know better than them. But no one knows better than you. It's your own money. If you don't stand up for your money is gone in the stock market. Okay? It's not when you save money in the bank. You have, for example, $100,000 in the bank, even without interest rate. Okay, you know that you have 100,000, it doesn't move. You know that you have this money. Okay? And the idea that money always losing value, it's not true. Now I will tell you the proof that 100,000 after a few years it doesn't lose that value. Check for example 2008, where the housing goes 50%, stock market goes 50%. In 2008, at the end of 2000, let's say 2007, you have 100,000. In 2008, when the market lost 50% and you buy stocks at 50% discount. So what does it mean? It means you have already made 50% of your money. You have made it because the next year the stock market was going up, and you buy so cheap, and now you are buying. Your investment is going crazy from 2008, 2009, 10, 11, 12, 13. Okay, if you bought a house, small house, old house at 50,000. In 2008 or 9 or 10, because the market was going down, like a 50% discount. Now the next year, the other years, when the market is going good, like now, from 50,000 you can sell it at 100,000. So you understand, these are opportunities. When the market is down and everything collapsing, this is the time to invest. It's not the time to sell. It's stupid. But because you don't have money, you are not investing in good times and in bad times. So you are always poor. That's why most of the poor stay poor. But the rich, they invest all the time. And when it is the bad year, they invest more and more. They took from other money that they have and they put it in the stock market. Because they know this is history. It's history that tell us that the bad years they are the best to invest. Even in 1929, where until 1923, 4 years on the row, the stock market was, I think, 350. The Dow Jones, it goes to $40. Do you understand? If you bought at $40 or $50 or $70, do you understand what does it mean? Now it is 25,000, for example. From $40 or $50 your father or grandfather has bought at that time. Grandfather, for example. Now you are billionaires. Your family is billionaires. But understand that people, they don't have this idea. The rich, they have the best education. So when you get better education, you understand. That's why you see in USA, they don't give you the best education that makes you rich or that makes you live better. Now, they ask you to use credit cards, to enjoy yourself, to buy more and more and more. Okay? But you don't have money. Okay? You make $2,000 a month and you spend $3,000 in a credit card. So, you ruin your credit score, and then you ruin your life because you have debt. And then the banks, when you want to buy a house, even if you have the money to pay for the monthly payment, they say, oh, your credit card is so bad, we don't give you money. So you understand? So all this has a relation with education. That's why for me, when I speak about trading or speak about real estate or speak about, it's just education. When you are educated, what you should do is just, you should have money, you should have better job, you should go do business, and then have money and put them in stock market. Stock market is one of the best vehicle of making money. Check just Warren Buffett. Check Warren Buffett. He was not a millionaire. His father was not a millionaire, but he has done the right thing in his life. That's why now he is a billionaire. Our President Trump, he is a billionaire. Why? Because he goes into business. His father, his education, it's all about business, how to make money. It's not how to make money without money, as YouTube channels, you find videos, how to make money without money. No, man. No, man. Speak about this to stupid people, because no one is making money without money, except when you are a singer, or you have some talent, or you have a funny thing, or you are an actor. Yes, without anything, but you have some education and you get the right path, and then you can make money. Okay? Mike Kubik said, I like using the resistance line strategy with some penny stocks. Good. He was married to the stock, the guy that lost 75 of his money. Yes, he is not married, but now, believe it or not, he is not just divorced because he's a widow. He is a widow. His wife died. All his money is gone. I have already told this story. I taught someone who has $500,000. I just tell you this story many times, but it's the truth. He bought two stocks. One stock with $250,000. He doesn't know about trading. He doesn't know about brokers. He used the bank, and the bank ripped him off from fees. And so I explained this. It's a long story. But what's the problem is that he has one stock. I think at that time it was Amazon. He doubled his money from $100,000 from $500. It goes to $1,000. So $250,000 it becomes $500,000. So he is very happy with that. Now he has $250,000 with another company, but because he doesn't know investing, he just choose this company. Maybe he heard of it. He has no idea how to invest. He just put all his money in these two stocks. After a few years, he didn't check. He just put money. He is a good guy. He has I think he was putting 25% of his money into his investment. What he is doing is great, but the problem, he has no education of how to invest. He has no education. First, he uses a bank. You should never use a bank when you are invest, because the bank is against you. There are a lot of fees they put. A broker, you know how much he take, and you know even the bid and the ask, and you know the price. You see the stock by your own eyes. No one will take your money. Okay? There are no other fees. You see it. Okay? You see the price. There is no fees. And when they hold your stock for 10 years, 20 years, the broker doesn't ask you money. The exchange, they don't ask you money. They say, oh, each year give me $100 because you put 100,000 and we are holding your investment, so you should pay us. No, in stocks you don't pay anything. Now mutual funds you pay fees. That's why we have 401k. And for those who don't know how to invest, who don't know anything, yes, you can do 401k, but for people who have better knowledge, you should do something else. Okay? So guys, I think I talked too much tonight. I didn't stop talking. 1 hour 38 minutes. It's too much. One time, guys, if I tell you, before when things were so exciting and a lot of people excited about what I say, some videos live I took 5 hours. Someone told me, how you speak with 5 hours? I said, because the people ask questions and I answer. So for me, it's just like I am with friends. So when I talk, I don't see the time. So I don't care about the time anymore. So I just talk. Okay, guys. Now, in 2021, The trading basics are the same. Whatever techniques you use, whatever strategies, your strategy you think it is new, but it has been from 19th century thinking about strategies, thinking about techniques. Okay? Thousands and thousands of techniques, you find them in books published 50 years ago, 80 years ago. For example, Jesse Livermore, his techniques or his strategy based only on price, there is no other thing. It is like 70 years, 80 years, 90 years. He published his book. You can find it online, How to Trade in Stocks by Jesse Livermore. You can do that. You'll find the book. And for me, if you like books, you like literature, you can see Reminiscences of a Stock Operator. This is a very good motivation for you. You just understand that one guy without any knowledge, and then because he noticed the prices, how the stocks moves, and he become millionaire because of that. So this is a good thing people will think about. Wiseman said, thank you for your time as always. Hey Wiseman, send me another message. You said in Facebook? I don't know if I get a Facebook message or is it by email. Oliver Blair, thank you very much for coming. And guys, if you have a question, please ask the question now before I just give you 1 or 2 minutes or 3 if there is any other question. For the future, as you might know, this month of December was very calm. I was prepared for anything, but nothing happens. That's why I told you guys, do not be scared of the market. People are talking too much. Oh, the market will collapse. The market will collapse. Each year they say the same thing, which is stupid. But understand that it might be having a correction in the market. Wall Street can hit at any time. So just be prepared for any day. Okay? It's not only because of January or December. Wiseman said, couldn't on your timeline, but put it on your newest Facebook topic comment section. Oh yes. I am not looking at Facebook comments and the other stuff a lot. So I am always on YouTube, or my subscribers. When they send me an email or so, I respond very, very quick. Or someone who uses Facebook Messenger. It's like personal. You go to my page, you send me a message. I see it. Because I see the whole day 4, 5, 6 times my cell phone. So whenever I got a message, I will answer back. So it is about subscriber, or is it about something happening in the market or news? Some people, I always talk to some people about the news, about what did happen. But it is just a friendly talk. It means it's not business anymore. Sometimes they ask me questions and I answer them depending on the subject. And some people ask me about their stocks, about what we do. It's a lot of stuff. So you say my grandpa was born on Friday the 13th. That's good. So what is the relation with the 13th, Friday the 13th with trading basics? Wiseman, I don't understand. I don't understand what's the relation. Okay, Wiseman, you should send me a Facebook Messenger message. It's better because as the guy who just as Miles Miles Kubiak, he sent me right now. He sent me a message. I will answer after. I will answer you after the thing. And someone sent me an email. I got it. I will send you an answer. But it is better. Yes, Lucky Luke or Lucky Luke. You send me an email. I will answer you. But understand, Lucky Luke. If you send me a Facebook Messenger, it will be very, very quick. Now the email I answer also, but it's longer. It could be one day. I will answer you whenever I check my emails. But Facebook Messenger is just right away. In 1 hour, 2 hours, I check. Like Miles Kubik, he sent me a message at 7:29. So I check the thing. I find it. Oh, you were born on the New Year's Day, but Friday the 13th. Some people see as bad luck. Oh, no. Wise men, listen. Wise men, in my beliefs, I don't believe in bad year like Bruce Lee was in the year of the dragon, and it was a bad year in Chinese, and all the kids, they will die, or they will have bad fate. But Bruce Lee was one of the best famous human Chinese on earth about martial arts. So it has nothing. I don't believe in this. It's not the day that govern you. It's you, what you do in life. Wherever you're born, in the first or the second or 13th, don't worry about this. And it's not bad luck or anything else. Karim, you were? I was born in December. It doesn't matter. What is the difference between you were in December or in August? The only thing is, in December you don't go to swim. In August, if they throw you in water, you can swim. That's the best thing. I like summer better than winter. It's just because it is cold, and I don't like cold weather. I like hot weather. Okay, so but regardless of where you were born, don't have these bad ideas that because of that day your future will be bad. Your future, it's you. Okay, it's you who manage. If you have a job, it's you who have chosen that job. You can change the other job. So it's not God that puts you in this job, and it's not someone fate because you were born here. You should be that kind of person. No, I don't believe in those things. I have once a friend who believe in this zodiac. One time I mentioned that this is just a full crap thing. What is this that December will be a good year for you? I mean, in December, let's say in this December zodiac, for example, December. Let's say in the whole world in December we have 200 million. You have some people who died in this year, so it's not good. So you have people who got the first job. It's a good thing. You have some of the people who get wealthy that year. It's good. So it means you find some people 10 million who got corona and 100,000 died. So it has nothing to do with the year. It has to do with what is you are facing in life. While some people are in the hospital, they are dying, accidents or corona or any other sickness. Some people are having fun and they don't think of sickness. So you understand? It's where you are. You find the poor, he's like he doesn't have what to eat, and you find the rich, he's throwing food anywhere. So you see the difference. So I don't believe in that. Okay, guys, thank you very much for your patience, and thank you very much for listening. If you have question, you can send me an email, or you find here my Facebook page. You can send me a message without being a friend. Even just you click on message and you message me. You should use the personal profile. Don't go to the other one, because when you go to the business thing, sometimes I don't see it for days. So you miss. As someone here, Wiseman, I think he sent me a message and I didn't get or I didn't see it yet. Okay. So guys, thank you very much for. Hope this next week. Hope the market will decide where to go. This is what we are waiting for. I am waiting either for correction or for the stock market to go up. But trading into a range, as you can see it now in December, nothing is happening. For us in the subscription, in our trading account, we bought stocks, we sold stocks according to our rules. That's it. So I told them I will be holding stocks, and I sold some stocks that doesn't go good, and that's it. So if there is something new, the market moves good or something or bad, I will tell my subscribers that it's very hard. They should sell some of their stocks, or they should sell short, or they invest ETFs, or they buy puts. It depends on the situation. Okay. So guys, thank you very much. And hope you enjoyed your holidays, and see you next time. Thank you very much.